So the following are valuation performance metrics that we can use for doing our fundamental analysis. So I'll explain some of them because of course there are many of them, but I'm just gonna stick with some of the most important ones. And to be honest, this is probably the most boring part of the course, but this is stuff like is important for you to guys to understand what it is and what does it means these uh, types of metrics. And to be honest, with the technology that we have today, with platforms like Yahoo Finance, we don't need to calculate them ourselves, and that's why like the effort is just for you to basically understand what it is, and that's it. So the first valuation metric is price to sales. And here I have two examples of companies. The first one is MasterCard, and the second one is Visa. Or sorry, the other way around. And yeah, that tells us if I buy a stock today, how much how much I'm paying is that on sales. When of course, if you would like divide the sales or the revenues by the number of shares, so it tells us that for every stock from MasterCard, Visa that we pay, uh, we are paying 20 times the current sales. So 20.51 for MasterCard and 20.92 for Visa. And they are basically kind of similar. Of course, these comparisons are basically the same. And what you can see here, these are the fiscal years. So as you can see, like in 2016, the price to sales was lower, but is constantly like increasing to 20.51 in the last 12 months. So the second metric is actually price to book, and in this one we're not looking at sales, but we're looking at the equity instead. So if I buy a stock today, how much equity I'm paying more, and in this case, as you can see, like the one of Visa is way higher than the one of MasterCard. Of course, the lower the better, right? Then we can go to price to earnings. That is basically how many earnings I'm paying for. I'm paying more in earnings than the price I'm paying. So you can think of the PE ratio as imagining that we own like the whole company, right? But we want to buy it. Is okay. How many years do I need to wait for getting $1? So for getting $1, we need to wait 39 years for MasterCard and 37 for Visa. So yeah, that's basically it. So we have price to book, price to earnings, and price to sales. To be honest, like they are all like different each other, and some of them work better for certain industries. For example, cyclical companies. When we look at banks or let's say like oil companies, the price to book works really well. And yeah, of course, when we are looking into companies that are basically about to go bankrupt, what people actually look is at the price to book, because after all, it's telling us, okay, the price is like this today, but if the company goes bankrupt or something and they need to liquidate it, how much of that equity I'm gonna still receiving, or how much of that equity I'm paying extra. So another metric is the return on assets. This is not a valuation metric, but it's actually for looking at the managerial performance. So we can see here the return on equity is the net income divided by the total assets, and we can see that MasterCard is doing it better, is getting a better return on the assets compared to Visa. And the last metric is free cash flows. So this is basically all the cash that enters the company, and then after getting that operating gaining cash, how much of that money is being reinvested for the operations of the company, named as the capital expenditure, right? And then we get the free cash flow. So that's the money that the actual managers, CEOs of the company can decide to do, because they don't need that money for something else based on the operations of the company. And the reason I put both the operating cash flow and the free cash flows is because when we look at these metrics, we need to basically compare them, and the lower the difference, the better. So as you can see here, the difference of MasterCard is better than the one of Visa, right? And to be honest, after all, like only this percentage, like for example, Visa, like almost 80% of the operating cash flows are free cash flow. This is fantastic. And also, of course, there are some companies that doesn't have this type of like difference between the operating cash flow and the free cash flow, because they need to reinvest and reinvest and reinvest a lot of the money into the capital spender. And this, an example of these are the airlines. Like the cash that is actually free for them is really low. But as we can see here, for Visa and for MasterCard is a lot of free cash flows that they can obtain.